Real estate, the investment against recessions, high inflation and a lot of other risky situations. But not everybody has enough money to put 20% or so as down payment to buy a property. So, how to invest in real estate with a small amount of money? Investing in REITs. A REIT is a company that owns or finances real estate. Most REITs are public companies that trade on a stock exchange. So, instead of buying a property that requires a lot of money, you can buy stocks of REITs even for a small amount of money. For a company to be qualified as a REIT, the following requirements must be met. 75% of assets in real estate, cash or US Treasuries. 75% of gross income must derive from real estate. At least 90% of taxable income paid as dividends. Be an entity taxable as a corporation. Be managed by a board of directors or trustees. Have at least 100 shareholders. 50% of the company cannot be owned by 5 or fewer shareholders. When people think about real estate, they usually think about rental properties. So properties where people live and pay rent to the owner. The reality is there are different property types, each one for a different use. That's why REITs can be categorized by property types. Office REITs own office real estate. Industrial REITs own industrial facilities. Retail REITs own retail real estate. Lodging REITs own hotels and resorts. Residential REITs own residences. Self-storage REITs own storages. Healthcare REITs own healthcare-related real estate. Data center REITs own and manage facilities that customers use to safely store data. Why someone should invest in REITs instead of directly invest in real estate? First of all, high liquidity. It's easier to sell stocks than a property. No work needed and no experience in managing real estate needed. The REIT manages the properties, you don't have to. Your money works for you. Small amount of money needed to invest in REITs. To buy real estate you need more money. Thank you for watching guys. Subscribe, leave a like, see you next time.